Hi everyone, my name is Andrew Tykhonov and I'm a junior at Marquette University. I'm a domestic financial analyst for Marquette Applied Investment Management Program. I'm going to presenting Brightsphere Investment Group, and its ticker is BSIG. Brightsphere is a holding company that provides asset management services and development of business opportunities domestically and internationally. The firm operates through three business segments: Quantum Solutions, Alternatives, and Liquid Alpha. Quantum Solutions provides highly tailored strategies that leverage data and technology in computational investment process for asset classes. Alternatives comprises illiquidity and differentiated liquid investment strategies such as private equity, real estate, and real assets. Lastly, Liquid Alpha focuses on alpha generation for specialized investment strategies across market cycles. As of June 30, 2020, Brightsphere had $155.7 billion of assets under management from 5 affiliates: Acadian Asset Management, Landmark Partners, Campbell Global, Thompson, Siegel and Walmsley, and Investment Counselors of Maryland. The company was founded on May 29, 2014, and is headquartered in Boston, Massachusetts. On the right, you can see some stock information and also a 1-year price chart. It is recommended that the AIM Small Cap Fund purchases shares in Brightsphere Investment Group at $19.01 with a price target of $25.40, representing a 33.60% potential upside. The reasoning behind the recommendation is that in 2020, Brightsphere sold affiliates such as Barrow Hanley and Copper Rock, which was the reason for recent large share repurchases, increasing capital returns. With around $400 million in cash balance available at the end of 2020, and Brightsphere is expected to repurchase more of a company's shares or include a special dividend. The alternative asset industry is projected to grow to $14 trillion in size by 2023, with an annual growth rate of 8%. Affiliates in the alternative segments such as Landmark Partners and Campbell Global have potential to grow their assets under management with this trend. With the continuously increasing demand from institutional investors and interest rates expected to stay at relative lows, Brightsphere can capitalize on its segments. Looking ahead, Brightsphere has been fundraising for its alternative segments, specifically Landmark Partners, since the beginning of 2020. Alternatives revenue has increased by 9.3% in Q4 2020 compared to Q4 2019, mainly due to those fundraising activities. Brightsphere reported roughly $1 billion has been raised in 2020, but they're expecting to raise $10 billion over the course of 2021 and 2022. Some sell analysts have done forecasting and are even expected for them to raise $14 billion. Management states fundraising will increase dramatically in 2021 and 2022 due to a decline in COVID cases and an increase in vaccination. The company only used one of their two strategies to fundraise throughout the past year, which is infrastructure. With the introduction of their asset secondary strategy, management is expecting to hit its targets. The increase in fundraising will lead to higher earnings from alternative segment, specifically their affiliate Landmark Partners. With the sale of one of Brightsphere affiliates, Barrow Hanley, in Q4 of 2020, Brightsphere gained $234.1 million on the sale and is expected to return capital to shareholders and deleverage. Cash balance increased significantly at the end of the Q4, which was $402 million compared to $130 million in the Q3. The company fully paid off $80 million outstanding on its revolving credit facility throughout the Q4, and at this point, Brightsphere does not have any longer dated bonds outstanding. Thus, management's priority at the moment is to return capital to shareholders. Next couple of months, Brightsphere plans to either repurchase its stock or do a one-time special dividend to return capital to shareholders. With the news coming out in February 2021 that William & Blair Investment Management offered to acquire Investment Counselors of Maryland. Counselors of Maryland is a part of Brightsphere Liquid Alpha segment and represents $3.2 billion of assets under management, which is around 2.06% of Brightsphere overall assets under management. The sale of Investment Counselors of Maryland would help Brightsphere increase market valuation in their alternatives and quant and solution segments. The monetization of their stakes in ICM will further return capital to shareholders and pay out long-term bonds. The deal is expected to close in the second quarter of 2021, and an estimated sale price could reach $20 million. An intrinsic value for Brightsphere was reached by completing a 5-year free cash flow model. Using a terminal growth rate of 1.5% and a cost of equity of 9.37%, an intrinsic value of $32.95 was reached. A sensitivity analysis was conducted of the terminal growth rate and cost of equity of plus or minus 50 base points, ranged from $26.49 to $43. Additionally, a 10-year excess equity model was created using terminal growth rate of 1.5% and a cost of equity of 9.37%, and a value of $24.16 was reached. An EV to sales multiple valuation was calculated using a weighted average peer multiple of 2.16, resulting in a relative value of $14.93. Finally, a price to equity multiple valuation was calculated using 2021 earnings per share of 2.45 and utilizing blended average PE multiple of 10.78, resulting in a relative value of 26.40 cents. But weighting these models 30-30-2020, a price target of $25.40 was reached, representing a 33.60% upside. Currently, Brightsphere pays a dividend yielding 0.21%. Now we have some of Brightsphere's investment risks. First is market fluctuations. Volatility in financial markets for interest rates and equity markets can decrease the company's earnings. Since Brightsphere receives revenue from management fees from assets under management, it could fluctuate for poor market conditions. Second, competitive market. Trends towards consolidation in the investment management industry can result in an increase in strength of competition. Consolidation can offer certain competitive advantages to competitors, thus resulting in a potential decline in performance. Lastly, increase in regulation. Brightsphere operates domestically and internationally. Increase in different laws or changes in laws can affect the firm's business materially. The management of Brightsphere is young, but is devoted to make Brightsphere a better firm. Saran Rana has been the CEO of Brightsphere since April 15, 2020. Previously served as a CFO of Brightsphere in 2019 and was a member of Brightsphere board from November 2017 to 2018. Christina Wider was appointed CFO and accounting officer in 2018. Previously served as assistant controller and manager at PwC. Due to Brightsphere's favorable asset mix, organic growth potential, and growth in the alternative asset industry, it is recommended that Brightsphere be added to the AIM Small Cap Fund. This opportunity should not be passed on by the AIM program due to Brightspere's position for future growth. Thank you for listening. If you have any questions, my email is andrei.tykhonov@marquette.edu, and I will be answering detailed discussion posts frequently. Thank you.